The Pro Show is brought to you by Rockin' Media and our proprietary Flash HDR photo process, providing you with the best, most realistic photos of your property. See the difference at rockinmedia.com. Hi, and welcome to the Pro Show. I'm Rick Machle. We have a little different show today because today we're talking insurance, which is what everyone wants to talk about during the holidays. But it's really important, and it's something people leave later in the process when they're buying a home and forget about when they're actually should be thinking about it sooner in the process. Debbie Jacobs is here to join us to co-host this show as we talk to an insurance agent about all things insurance. Greg is talking about rentals and Nancy talking about mortgage issues. And that's all next on The Pro Show. Today we're talking all about insurance because that used to be one of those things that we used to deal with later in the process when you're buying a home. Now it almost needs to be one of the first things. And joining us today is Debbie Jacobs from the Coldwell Banker Tech Center office down in off of Bellevue. Hi, Debbie. How are you doing this morning?
I'm doing great, Rick. How are you doing today?
I'm doing awesome. Thanks for asking. And our special guest is Talonnie Granger from Farmers Insurance. She's going to get us all caught up on what's going on with insurance. Good morning, Talonnie. Tell us a little bit about yourself. How long you been doing this?
Good morning. So happy to be here. So just a little background. I've had my insurance agency for 3 years. I've been in the finance industry for closer to 10. Started off more in the financial services world as a broker and working with retirement accounts and asset management. And then just made the transition when I noticed that there's such a big disconnect between wealth management and protecting your assets. So later in 2021, I was able to do an acquisition of a Farmers Insurance, and it's been a great fit for me, and we've been chugging along ever since.
Well, that's great. It's awesome to have you with us today because we've got so many questions. So let's start with property insurance. What does it cover? So that, you know, and what doesn't it cover? Let's start with what it does cover.
Yeah, of course. So I love that you brought that up because a lot of people just don't know what they have in their policy. Of course, your property insurance covers your home as a whole. So we'll see usually in your declaration page or your coverage breakdown, they'll have it listed out as like a dwelling or A. Right? So it'll be like A, B, or C all the way down. And those all cover different aspects of your property. So high level overview, the entire home, the outside and the inside is covered if there's a total loss. And that just factors in the rebuild of it. So when you see that really big number on your policy, that's the way of the insurance company estimating how much it would cost to rebuild your home from the ground up. So you'll see that listed as the dwelling. There's also coverage for separate structures. So if you're looking at if you have sheds or a detached garage, that's usually what's going to be covered in separate structures. You'll also see loss of use listed in your homeowner's insurance. And these are like the first three main ones that you'll see. And that means if you guys are displaced from your property and you either have to get a rental, a short-term rental, or stay at a hotel, that amount listed is what you have to cover your expenses and the rent. And that's covered in your homeowner's insurance, which is a perk. There are a few little nuances that aren't covered in homeowner's insurance. For example, sewer and drain coverage is usually an additional endorsement. And a lot of times people miss that part. If you have a sump pump, that is going to be an additional endorsement that should be added to your policy as well. Also, just small details on the home, like you may see it listed as metal marring, which means the metal pieces on the home may be additional endorsement to cover depending on your policy. So you have a brand new roof, but they're putting back those same old gutters because that wasn't covered, right? So homeowners insurance as a whole will cover the property, but where you want to start asking questions is in the little details. Like, is this type of siding covered? Do I get discounts for this type of roof? Sometimes we can add floaters as well for cool things like jewelry or electronics, and sometimes people don't realize that's in their home policy either.
So it seems like, just to be clear, the policy is key, because if I don't read my policy, I may assume one of those things you just talked about is in there, but it may not be, and therefore it's not covered. If it's not in that policy, it's not covered, right? Like floods.
Right. Right. Yes, absolutely. We talked about that. And I could even say, like, as an agent that works in the Denver metro area and even major part of Aurora, it's not a big push until I get to my clients who are like in more the farm areas. And then we really start to look at what does that look like? I mean, even some parts of Aurora, sometimes you're like, oh, we should add this endorsement here.
Yeah. And Debbie?
And that's one of the things that, you know, as an agent, before I write an offer, there's actually a flood zone portion in the MLS that I can check to see if it's in a flood zone. And then if it's in the 250-year flood zone or 100-year flood zone, it actually gives you an illustration. And so that is something that I usually check before writing an offer for a client, just to make sure that we do know what the insurance company is going to come back at and ask for flood insurance or not.
I love that. That is so important too, especially for my first-time home buyers. They're really overwhelmed. They usually go off of whatever their realtor says, and they're just trying to go through the process. So the fact that you're so educated and you take those steps, that is awesome.
Another thing that I really like to do that I think is really important is, especially if I'm looking at first-time home buyer, possibly a condo, what I like to do is I like to isolate a few condos complexes that they might be interested in, and then go back and get a quote ahead of time to find out what that insurance cost is. Sometimes, depending on if as you know, if the HOA is covering the roof, it might be a different type of policy that's very low for an annual fee, or it could be, you know, almost as much as a single family home.
Obviously, with the fire that we had a few years ago in Superior, that's made everybody a little more nervous, including the insurance companies. And so what's been happening with rates these days?
Well, what I've noticed is with other insurance companies, they're starting to take what we call in our industry rates, meaning you'll start to see rate increases with State Farm, Allstate, other companies like that, because they didn't do it earlier. So with farmers, we took big rate increases the last year and the year before, which was really tough because we weren't very competitive in the market, but now we're starting to see that level out. So what I've noticed this year is if policies aren't being dropped as a whole because of where they're located, clients are noticing $1,000 increases in their homeowners insurance or more, just depending on where they're at.
And I know, you know, I live in the foothills, so, you know, fire is always an issue, and we know we're rated for that, but that's creeping more into the metro area now, too, because of, like, the Superior fire.
Yeah, absolutely. And it's one thing, you know, honestly, I didn't experience too much until we had the wildfires. And after that, we got a little savvy. Of course, some areas too, I just didn't think of, like in Littleton, where they have the, you know, some slight foothills or kind of the higher sloped areas,
Right.
is when you're starting to see that fire score increase. And you wouldn't think about it, and you're like, oh, you guys are like 5 minutes away from downtown Littleton.
Let's say that I'm looking for a client or maybe a listing, and there's a lot of pine trees that are pretty close to the house. So is that mitigation? I know that, you know, that's kind of the word, I guess, is mitigation. Tell me a little bit about that. Like, what would you suggest? Earlier? Should I do that at the time that I list the property? Should I advise them then, or should I wait until the insurance company asks for it? What do you think your best, my best choice would be on that?
Yeah, I mean, it's always best to be proactive, especially in areas that have what we call fuel. So that's high vegetation areas or dense trees or anything like that. Especially if they're located on a hill or a slope or in those foothills or anything like that. Um, Different insurance companies have different parameters on what they'll accept as well. So, talking to their client, if they have somebody they used before, great. Reach out. You can also just generally check by the zip code as well. So similar to what you do like with the flood, we have a breakdown of high risk areas, and it's usually updated every couple of months. So you can call and say, hey, is this on your fire line list? Just by providing us with the zip code.
Is Farmers not approving certain areas at this point? Are you covering everything?
No, we are pretty strict on that, and we have a pretty tight scoring system.
Okay.
So I've been having to broker out a lot of things that are, located in what we would consider those high risk areas. So our max score, and it's actually the lower the number, the higher the risk.
Okay.
So really from 0 to 3, we really don't touch it. Even sometimes if we get a 6, depending on what's causing that, whether it's just too rural and away from emergency areas or it's high vegetation, we may have to shop that out as well. But our guidelines are pretty strict on that in-house.
So Debbie, it seems like this should be one of the first things when you go under contract, if not before, that you should be talking about, correct?
Yes, and I think that a lot of the transactions, people kind of blow past that deadline. Oh yeah, there's a property inspection deadline. It's usually about 10 days out, or pretty close to somewhere around inspection. Objection is typically where I put it in my offers. But if they blow past that inspection or that deadline, for insurance, there isn't any way to go back. They really don't have a way to exit the contract. They're going to have to, broker it out or, look for other alternatives, and which could be a very high expense depending on the area.
Not only could it be a higher expense to broker it out, but the turnaround time is a lot longer as well. So if you guys have a closing date that's fast approaching, putting that off to the last minute can cause some high stress situations.
Well, and some agents won't actually, some banks, you can't close without that insurance, right? Because that's the asset is their collateral on the mortgage. And so if you moved in and the next day had a bad fire and you're not covered, you're in trouble. So what happens then, Debbie? Does it not close? How does that work?
If you could not secure insurance for a property and the buyer was looking to obtain a mortgage, then you wouldn't be able to close. The bank technically owns the property until you pay it off. So they're not going to be, anywhere near agreeing to a risk of having a property that's uninsured on their books. So it would have to be moved down. The insurance, basically the agent of the buyer would submit a document saying that they can't secure insurance in the property deadline. And then there would be an amend, extend, or an agreement between buyer and seller to move that deadline out to whatever the insurance company thought that they needed to be able to secure that insurance.
Are they extending usually?
Well, I think that depends on the buyer or seller. So if the insurance deadline is later and after the inspection objection, and the buyer and seller have already agreed to, some type of inspection resolution, then it's possible that the seller would be in the mood to go ahead and extend it. But if that situation was really tough, let's say the seller got kind of squeezed a little bit and is having to give a lot of seller's compensation back to the buyer, the seller might not be that interested in extending because they might feel like they would be able to do a better with a different buyer in a different transaction.
Typically, then, does that mean that it would go into where the earnest money would be forfeited? Because you blew past your inspection objection, and now you still can't get it, and the seller doesn't want to extend. How does that work?
So let's just say that, let's take some fake dates here.
Sure.
Let's say the insurance deadline was the 5th of January.
Okay.
And the inspection deadline was the 10th of January. And then the inspection resolution was the 15th of January.
Okay.
So we've blown past, let's say it's the 16th of January. We've blown past the inspection, or excuse me, we've blown past the 5th, which is the insurance deadline. We've already negotiated with maybe a very contentious inspection objection to inspection resolution deadline. The seller may just say, too bad, you blew past the insurance deadline on the 5th, and we're not going to extend it. You either come to the table with closing by the 30th, or we're going to keep your earnest money. Because they've passed that deadline, there's no obligation for the seller to extend that deadline.
Okay, so that it cancels the contract. So do you advise people to start looking at this even before they go under contract, or if they're looking in certain areas? How's that work?
Yes, so on my offers or for my buyers on my offer, what I will do is I will put that insurance deadline typically somewhere in between inspection objection and inspection resolution. This is when you're already looking at bids, you're already trying to figure out, do I need a sewer line replaced, that type of thing. So you're already cognizant of things that might be failures, I guess is probably the right word, on the buyer side. And so that's usually when I try to insert that. And yes, I like to have that insurance conversation well ahead in advance on my buyers.
So what about if they're looking at multiple different condos? Do you say, give Talonnie a call? She'll let you know whether this one's covered and that sort of thing, or how do you go about that?
That is really important on condos because there's non-warrantable condos, and that means that the insurance might not cover it. They might have, in this scenario, we've had a lot of roofs that have been damaged, and the damage amount for the roofs is so significant that there's insurance that won't cover it, or they're looking at special assessments for the entire neighborhood. There's also a huge variance between and Talonnie can explain this better than I can for sure, but there's like a HO6 policy, which helps with special assessment that might need to be talked about ahead of time. But a condo is different than a townhome, that's different than a shake roof or a flat roof. And so all of those components really change the amount that the buyer would be paying per month. And in a condo scenario, that is pretty important to talk about first up.
So one thing I see with new purchases sometimes is if this is usually the higher value condos or townhouses, or if something is excluded with the HOA, the banks will kind of push for them to be in the HO3 or like single family home policies. So it covers more of the property. However, the client ends up paying extensively and not using that type of coverage. So as realtors as well, this is a great way for you to really advocate for your clients and say, hey, look, this is a condo policy, and you're having our client get into this coverage that doesn't fit their needs, and it just inflated the cost. So I know that is something you mentioned at the beginning of our call, that it's really important to shop that so that they stay within their buying power. With our condo buyers and townhouse purchasers, I see them kind of get pushed around quite a bit, where it's a significant difference where you can be paying $600 to $800 a year for your homeowner's insurance for your condo, and a single family home with that same address may be $3,000 to $4,000. But because of the risk or what's included with the HOA, the bank kind of pushes for them to be in a wrong policy, so to speak, instead of just adding the proper endorsement. So that's definitely an area I would encourage realtors to check on as well, and look into, like, what is excluded with the HOA, and just making sure that your client has the proper coverage. And don't become an agent, but say, hey, is this a condo policy? Is this a policy for a townhome? Because it does make a significant difference in price.
So on these special assessment riders, is that something that they can add on to any condo or townhome? Or is that something that's zip code specific? How does that work?
Yeah, so it depends. And that is like a famous saying amongst agents, unfortunately. But it truly does. So it's going to weigh in on different factors. Of course, your zip code, but also the loss history on that particular property as well. So that's also something I would encourage. We didn't touch on it yet. I don't want to.
Please go into that.
Okay, yes. So I ran into an issue with a first-time home buyer who purchased a property, and we pulled the claims history, and we actually had to broker it out to a non-standard company. So in Colorado, with where we're at, if you have one or more claims on your home, then we have to kind of look elsewhere, especially if they're due to water damage. Okay. So looking at your claims history on a property helps, because if you just bought this home and there happened to be this huge water claim 2 years ago, that may put you in a category where you have to have non-standard insurance for a year or so. And it's not because of your loss history, it's just because of the history of that property. So that's one thing I would have individuals check on as well. That's why it's really important to shop before you close. Because we can run a quote just with the address and pull all that data and kind of let you know what you're getting into.
So if Debbie had a client who was looking at house A or house B and they like both of them the same, could you pull quotes on both of them and see whether, this one, it looks like it be the same, but this one sits in a valley and it turns out it had a little bit of water damage. Can you find that out? Yeah,
absolutely. Just like when my clients are out shopping for new cars, right? Send me over the VIN numbers for the vehicles you're looking at, and we'll let you know what it looks like to purchase that new car. Same with houses. You can send us over the address, and we can pull that whole history up. It's not a ding on your credit. It doesn't affect the home in any way. It just gives you a better understanding of what you're getting into.
And roofs.
Oh, that was going to be my next thing.
Go for it.
One of the things that has been going on is that there are still, believe it or not, shake shingle roofs that are in Colorado, and those are the wood roofs. And the longevity of those roofs are amazing, because the way that they work is that they really help with watershed, but most insurance companies will not allow a new purchase on a wood shake roof property.
Talonnie?
Yeah, absolutely. So yeah, that is kind of in bold on our fire scoring sheet. No, for new policies, no wood roofs at all. So it is unfortunately one of those hurdles. Roofs in general, can be kind of tough, especially in Colorado. There's a couple of things we do here at Farmers just to make it so we can still help, but with the wood roofs, our hands are tied. I do have to broker that out. They're high risk. They're highly flammable. Even though they may withstand maybe wind or hail a little better, they're just too much of a fire risk for us to take those on.
Hail damage.
Right. Some of the other properties we can work with, as far as if it's an older roof, we can do an exclusion. I wouldn't encourage that, of course, but that is if you have a client with high liquidity and you feel like that is something that would benefit them, we are able to add exclusions on roofs so they don't have to factor it in, but they are responsible if there is something that happens to that. Sorry, go ahead.
This is something that I talk to my listings, my sellers, right from the very beginning. If they have a wood roof, then they should try to look and see if they have any hail damage, existing hail damage, because it's likely that their existing homeowner's insurance would cover a portion of the roof, probably not all because it is a wood roof, but at least give them some type of payment, towards a new roof, because the buyer is going to need to have that prior to closing. Or sometimes you can actually put some money in escrow and have the roof completed after closing, but the final payment and all of that insurance piece has got to be completely worked through. All the numbers have to be hard and fixed to be able to put that money in escrow. And that's a whole nother ball of wax for the seller.
And of course, that hail damage could be metal roofs, it could be flat roofs. We just get them on all sorts of roofs, right, Talonnie?
Yes. And I wanted to kind of touch on the claims process a little bit with you guys as well. Typically, there's no limitation or time frame where clients have to file a claim. So I will see this with typically my older clients where there might have been a bad hailstorm and they, for whatever reason, didn't file a claim. It was the holidays or, you name it, right? Life is happening. They don't care. The roof's not leaking. Fine. You still have time to go back and file those claims and have those damages assessed. We have lots of tools to kind of pinpoint when that storm happened. And if it's within the parameters of when you had coverage, your insurance company is responsible for supporting you and getting a proper roof in place if you need it. So I do see that a lot where clients are just scared to file a claim, or they just didn't know what was within their rights, so they let things linger for a while. Now, it is different for each policy. There are limitations depending on companies, but generally speaking, clients can file like weather-related claims for several years. There's quite a duration.
Showing your property at its best online is one of the first of many important steps to getting your home sold. At Rockin' Media, we provide you with the best quality photos taken by staff photographers, not contractors, who process your photos individually. We use our proprietary Flash HDR process, which combines the natural look of HDR with the color accuracy of Flash, along with properly exposed windows. Rockin' Media's HDR process is clearly exceptional. Find out more and schedule online at rockinmedia.com. What about pre-existing conditions? I mean, do you require an inspection before you'll take on a policy? Because there might have been hail from last year, and I'm just getting... So how does that work?
So yes, I'm glad you brought that up. Wear and tear, pre-existing conditions such as like a bad storm, where it might have happened a couple years ago, we will encourage you to file that with your other insurance company because we won't cover it, right? You just got with us. It didn't happen when you had coverage, but that doesn't mean you're not within your right to get that taken care of.
But so you can file with the previous owner's insurance, or the previous owner needs to file a claim before you close?
Oh, okay. You're talking about. So I was thinking about individuals who own the property for a while.
Yeah.
It can be a little sticky. You would have to reach out to the previous owner and ask if they're willing to file that claim. But we generally can pull up some details on who the policy was with prior, but it still could be a little tricky. That part, depending on, they're like, hey, we got rid of this property, you're on your own.
Okay, yeah. So if it's one of Debbie's new clients who just bought the house and there's pre-existing conditions, they better hope for a new hailstorm.
Unfortunately, yeah. Kind of how that goes.
The good news is I have a roofer that I trust implicitly, and
I
he will
love that.
come out with a drone and do very high level inspections without ever stepping on the roof. And before my buyers especially, before they go and buy anything, we're very, very cued in and clued into what's going on with that roof as well as other conditions of the property.
I love that. I was going to touch on that as well. Depending on the area, we will do a home inspection before your policy is able to be bound. And that's usually done with satellites or drones, depending. And new builds, not so much. But some of the older areas, we will kind of send somebody out to fly a drone and just make sure all debris around the area is picked up.
Okay. And as we were talking a little bit before about mitigation, if somebody came to you and said, and you gave them a 3 for fire mitigation because they had a tree growing up through their deck, if they remove, and we see them a lot when I'm taking pictures, it's a really cool thing, not so cool for fire mitigation at all.
Insurance companies.
Yeah, insurance companies don't like that. So if the current owner said, oh, this is going to be a problem because Debbie talked to you about this, and they cut that down, does that help? Or if they do a lot of mitigation before they go on the market, how does that help the whole process and the next person's rating?
Yeah, so for new buyers, right, typically people who own their property know, because your insurance company will send you a letter, they'll give you a call, and they'll say, hey, you got 30 days to either clear this debris, or this tree is kind of going crazy, so we're going to drop your policy next year. So those owners, they get quite a bit of a heads up.
Right.
And they have a certain amount of time so that they can get it within the parameters of being insurable. So all those details are sent out far in advance, and insurance companies will usually let you know if you're considered a non-renewal and why you're a non-renewal.
And what about new? If one of Debbie's clients, they're just buying the house and they're looking at that, but you're giving them a low rating and you're going to have to farm it out, does that then cause it for you to be able have to say, well, if you remove these 4 trees, that should help the situation?
Yeah.
Okay.
So, yeah, if they don't own the property yet and I pull it up, I'm going to get hits for this. They're going to tell me, hey, this property is ineligible and here's why.
Okay.
So at that point, I'll usually come back to the client and say, hey, look, I'm not able to write this policy in-house. That means we have to go to a non-standard market, and these are the reasons. Right. So once we break down the reasons, that allows that client to say, do I want to move forward with this, or do I want to look at another property?
Or if Debbie came to you and said, can you rate this? My seller has this property, and you can say, well, these are the 5 trees that need to come down so that the next buyer isn't either paying an arm and a leg because they have to go to the secondary market, right? They and they haven't gotten a notice from their insurance company because for some reason it hasn't hit that insurance company's radar. So it seems like being able to have that in the seller's back pocket, that they've took care of those things.
So I'm glad you brought up timeframes, because it really is more advantageous for a buyer to utilize the insurance company than it is for a seller who has that property, right? So say I have a seller who has their policy with me. Well, we're really checking that once a year around your renewal.
Right.
So say you're halfway through the year, you renew in January, it's July, it's summertime, we're selling our property. Things can be overlooked. And if you come back to us and say, hey, look, we need an inspection for the insurance, we'll say, yeah, sure. We'll get to that in December, a month before your renewal. Whereas if you have somebody who's buying the property, we're able to just pop in some details, and it's all in-house. So we're not going to send out a drone at that time. That usually does take about 30 to 60 days of having your policy with us. But we're still able to see quite a bit of new things because it goes through a different process when it's a new property that we're insuring.
But if Debbie has a client who's looking to buy that property, and in order to keep her client's insurance rates low or lower, it means taking out 3 trees. Well, you already said, 30 days is typical. So that could be a huge deal, right, Debbie?
It depends on how tall the trees are, but thousands of dollars per tree to get them completely removed. And I would
Time,
estimate,
too.
Yep, definitely. And if we've had a big storm, like a heavy wet snow, either when the trees have leaves on, those arborists are usually really backed up, and that is normally a 4 to 6 weeks before they could even get out there to do that. So very important to, as the listing agent, I'm going to walk the property ahead of time. I kind of know what debris and like shrubs and things that are very close up to, especially mountain properties, that's a no-go. I already know that. So just with a lot of the education that I've had in the past, that can help on the listing side. And of course, on the buy side, gutters that are filled with pine needles, gutters that are filled with debris from trees that are too close, all of those things. And then, obviously kind of a looky-loo of kind of what the roof looks like, what's the fascia look like. Do I see water damage that's been underneath because the gutters have not been cleaned for a long time? So those types of things are just, through experience, I guess.
Yeah.
On the topic of trees, because we know they can be wonderful or the biggest nuisance as well. So this is a little outside of the insurance world, but just what I've seen with clients buying property. When they're doing those when they're getting home inspections, they may bypass those sewer scopes. And it's really, really important to get that. That's going to give you a lot of information on if you're going to deal with roots coming into your pipes later on, or any of those things, especially if you have lots of vegetation and lots of older trees around. So, spring for that sewer scope is usually worth it.
Go, Debbie.
I have a question about that. So earlier you mentioned that the sewer line could actually be part of the property insurance piece. Is that like a special rider? Tell me a little bit about that. I've not ever heard about that really.
Yeah, so typically any kind of like outside line, so anything that kind of runs through your street, right? So sewer and drain coverage, that typically, or utility lines, that is typically an additional endorsement, and it's not just in the homeowner's insurance. And I bring that up for our bargain shoppers, because sometimes people are like, cut out anything extra. I'm just trying to get in this house, right? And that's where you see later on down the line that becomes the issue, because it's not covered in your policy. You'll also kind of run into that with new builds, where people are like, we don't need that. There's no new trees around. This is a brand new developed area. And then they run into issues down the line with their plumbing, and it's not going to be factored in that builder's insurance, which is a lot of the times why the builder's insurance is a lot more affordable. So that's just something to keep an eye on with your clients as well when they are getting those policies. What additional endorsements did they add? Did your agent add? Did you guys go over this? Because typically sewer, utility lines, sump pumps, those are not included.
So in this last probably 24 months, I have had all of these issues. I've had a condo where the upstairs third floor flooded into the second level. And then the insurance was like, wait a second, we've already got water damage on this particular second level condo. That happened. Then the roof thing, which I've just closed on with the roof, which, everybody was all amicable and it all worked out at the end, but oh my goodness, the roof was a stone-coated steel. You would think that would be nothing. And then I've had a new construction where we did the sewer scope, and sure enough, somebody had run over the sewer line with a backhoe, and the sewer line was completely disconnected and would definitely have flooded the house had they used the home before the sewer line.
Talonnie, is insurance, and I kind of know the answer to this, you kind of get what you pay for?
Yeah, honestly, right? I want to say, sometimes you can find really good coverage, Yeah, you can find really affordable coverage. But if you have a good agent, right, that's going to advocate for you and stick on those 1-800 lines if there ever is a claim, makes all the difference in the world. So sometimes we do have to get in the house, right? And people are really willing to cut those corners, but have a professional on your side that you decided to get this really cheap insurance. Try to at least find an agent that will broker that really cheap insurance so they can hold your hand and walk you through a couple of things, because it can get really rocky if we go the cheap route.
And you might not have that sewer insurance because you didn't add the rider, because you were trying to save that $12 a month or whatever it is. It can't be that much, right? For
50, maybe $60 for the year.
For the year, yeah. So it's like $5 a month to get that rider. But if you don't even know to ask, that's why having somebody like Talonnie is good, because she might go, do you know this isn't covered? And you really should have this, or you need to have this rider for your roof because you've got this type of roof. Or so that's probably a good thing to. We call this the pro show, and we got another pro here, an insurance pro this time, to talk about it, because there's so many things that can get you, and these are not little things. Which reminds me, the one thing that constantly is coming up when I come up for renewal is replacement coverage. And how that's calculated, and is it calculated correctly? And, oh, by the way, the cost of not only your belongings, which should be included in there, but now the cost of rebuilding has become a lot more expensive. Have you seen that a lot, where people are underinsured?
Yeah, absolutely. So that replacement cost just saves you a lot of a hassle. Yeah. Say, for example, you're with we call a set it and forget it company, right? So you got this policy, you bought this house 10 years ago, you never looked at it, you never touched it. Having replacement costs on there is going to at least ensure that you're keeping up with inflation, that if something happens, you can go out and find that part of the roof or that siding on the house, and something at least of value, similar value, if they stopped producing it. So having replacement costs saves the client a lot of hassle, because if you have just actual cash value, they're going to go out and see what is equivalent at that time. And the siding on the house could be, 15, 20 years old. Maybe you had that house built in the 80s and they never replaced those things. So having replacement costs on there just ensures we can go into the market, no matter what it is, and find something of equal value, and you don't have to worry about it not being covered in your policy.
And what about, do you encourage people to periodically take pictures of the inside of their property? So that if it burns to the ground, that you can say, yeah, but I put in this new kitchen. And you go, well, how do you prove that? Because all the pictures we have are on Zillow from 12 years ago.
Very valid point. Usually when my clients are getting anything put in, they're excited about it, right? You're going to find a couple photos on their phone. That is great best practices. I've never had to encourage anybody to take pictures of their new great kitchen, though. They're usually like,
it's keeping them from posting those. It's
right. Wait till you see these countertops in this cabinet, right? So they're usually, clients are on top of it when it comes to those things. Sometimes it's the smaller stuff that gets us, like they may get a high value ring, is what I see sometimes, like an engagement ring they don't wear anymore, and it's been, they have it just put up, right? Those are typically the things that you would think your homeowner's insurance doesn't cover, but it can, right? So just talking to clients about their higher value assets, and do you have additional coverage somewhere else, or should we add that mysterious disappearance endorsement on there, or your jewelry floater, or do you travel a lot for work with electronics and laptops? And because if you lose that somewhere, it actually could be covered in your homeowner's insurance. So those are some things that we can put in place, and it's really affordable. It's super cheap.
But it makes all the difference when that happens and God forbid the whole house burns down, then you have all that stuff internally. And I know we go through an evaluation every year to see whether we've got our internal belongings correct as far as how much is covered. And then I think we're a value, not an actual replacement coverage. So I might need to talk to you, Talonnie, because on our policy, it's, we just evaluate what we think it's going to cost, but we could be off. And if you're off by 10%, in this market, it's a big difference. It could cost you 50 grand. And of course, the other issue is deductibles can also affect your premiums and how much risk you're willing to accept. And like a car, are there different deductible levels, whether it's a total loss, whether it's loss of personal property? Are those different?
I love that you brought that up. So what you'll see now, and this is associated with those rate increases and just changes going on in the insurance industry, is there will be different deductibles based on the type of loss. So you'll start to see in those home policies, it's broken out to where wind and hail deductibles are going to be a percentage of your property instead of just a standard $1,000 or $1,500. So just kind of double checking those things and taking a look, especially if you've had a policy for a while. Insurance companies tend to switch what they're doing, and those type of things you just got a letter in the mail and you tossed it because it's not a bill, right? Taking a look at those changes can be pretty significant, because if you have a $500,000 home and now you have a 1% deductible on hail,
yeah,
you weren't anticipating that.
A $5,000 deductible. That's pretty
exactly pretty significant. And with us being in Colorado, most of our homes that I see are $500,000 or more these days.
Which is why Debbie does a good job of making sure they do inspections before you buy that new house, because otherwise you could be inheriting somebody else's problem as well, right, Debbie?
Absolutely. And there's really no recourse to go back to after the sale. There really isn't any recourse to go back to the seller, the previous owner, to help you with any of those costs.
Yeah, because it's done. Did you have any other questions, Debbie, for Talonnie?
Could you flex a deductible? Like, let's just say I have a condo buyer and they're really tight on their monthly payments, and the mortgage person is asking for like a $150 max. Is there a flex where they could say, okay, we'll increase the deductible and get that monthly down?
Yeah, absolutely. So the higher the deductible, the lower the premium. But associated with that is, what does it look like on a liquidity standpoint? Now, most insurance companies aren't going to be like, hey, you're going to have to give us this $5,000 before we finish this claim. But it does come out of your total amount paid through that claim. So it won't come out of your pocket per se, but it is going to come out of that claim money. So just making them aware of the risk associated with that, but increasing the deductible will lower their monthly payments.
But if they're already that tight, it could be a risk they're assuming for later down the road. Hopefully that things change and they can lower that deductible back down, right?
Yeah, absolutely. So even in the middle of your term for your homeowner's insurance, and that's a good point you bring up, you're not locked into this for a year, guys. So a lot of people are like, I can't do anything. My renewal's in 7 months. Like, you can call your agent, you can call your insurance company. Hey, I got a little more liquidity these days. Go ahead and raise my deductible. I can afford it, right? I'm comfortable with the risk. Or, there's changes we can make. Now, sewer and drain endorsements, typically we can't add that in midterm, but jewelry floaters and things of that nature, we can make adjustments during the term of your policy.
Last week, we talked about doing inspections relative to going into a property from the landlord side. This week, let's talk about what it is like from the tenant's perspective. And as always, we have Greg Batchelor here from Real Property Management. He's sporting his Santa Claus look, so that's awesome. And he's got the beard going. Looks great, Greg. How you doing, Greg?
Thank you, Rick. I'm doing well. How are you?
I'm doing great. So I'm a tenant, and I'm thinking, my landlord just shows up on the whim. Is that possible?
Yeah, it's a great question. So under the laws of quiet enjoyment in the state of Colorado, a landlord does have the right to come visit the property periodically, but they do have to give you 24 hours notice unless there's an emergency. For instance, if there is sewage backup, if there is something horrible that's going on in the property, landlord can just come to the property and be part of the solution in terms of getting that addressed and getting it addressed in a timely fashion. That said, if it's not an emergency, like a periodic inspection, they do need to give you notice to do that. Now, here's the benefit to the tenant in doing that. This is an opportunity for the tenant to have dialogue with the landlord. Like, hey, you know what, this particular scenario that we moved into the property 2 months ago, we did not think it's going to be a problem, but actually it's turning out to be a problem. That's the time to have that dialogue along those lines. If there's any maintenance issues that you didn't see that are not impacting your ability day in and day out to live, enjoy being there, etc., then that is the time to have that conversation with the landlord. There are many, many windows of opportunity, either by phone, via text, via email, but there is nothing better than just having face-to-face, in-person dialogue with your landlord at the property so that they can physically see what's going on at the property, not just hear about what's going on at the property.
And can I insist on being there when they're there, or is that also put in the lease, or how does that work?
Yeah, you can absolutely, because your property is in there, most landlords are going to want you to be there anyway, through the lens of they don't want any accusations of you took something moved, I had something here, now I don't. So it is very apropos, actually highly recommended just to go ahead and have the tenants and the landlords be there together, walk the property together, inside, outside, move on.
And what do they have the right to inspect? Can they open all my closets and everything like that? Or are they just looking to see that, if I have a no drug policy, that I wrote into my lease and they walk in and they smell pot, that's something different. But, can they go through all my dresser drawers or all my closets? How does that work?
Yeah, there is an element to your personal space. So going through dresser drawers would not be considered appropriate by most folks. Now, to look under the kitchen sink, to look behind the refrigerator, to see if the water line is backing up or draining or impacting the hardwood floors, or going into the utility room to check the furnace and the hot water heaters, those would be classified as very appropriate in any scenario to do that. Going through someone's personal belongings, out of scope.
Okay. Anything else that a tenant should know?
No, those are the basics, Rick. Those are really, really important for both the landlord and the tenant. Hopefully, more tenants will take advantage of this time to either spend time with us as a landlord, spend time with their individual landlord, etc. Always valuable time.
Well, that's good information. Next week, why don't we do a retrospective look at what was happening with rent rates throughout the metro area and have a discussion about that. How's that sound?
That's perfect, Rick. We would great time to look in the rearview mirror and look back at 2024, and then moving forward, we'll talk about some projections and some thoughts in terms of what we think 2025 is going to look like.
Look into the crystal ball. Sounds great.
Absolutely.
If you want to get a hold of Greg, please reach out to him at the number on the screen here. His team will get back to you. They got a lot of great information, and of course, we have over 20 episodes that Greg's been on that you can look up as well at theproshow.com. And as always, appreciate Greg being here to get us a little smarter about rentals. Thanks, Greg.
Absolutely my pleasure.
As always, Nancy Alexander's here to give us some great mortgage advice, and she's from Smart Mortgage Services. Hi, Nancy.
Hi, Rick. How are you, sir?
I'm doing well. So we talked last week about just kind of buying a investment property outright and, using different tools. One of the ones I wanted to talk about today is how do I use the equity in my current home without moving from that current home to the new home and putting that money to use in another investment property. How does that work? How do I get around and make that happen?
So, it's a good question. Always, you ask good questions. It's you've got three options that I see, right? You can do your refinance, right?
Okay.
That's number one. Most of us don't want to do a refinance if we're sitting at those beautiful rates of, 3, 4, whatever that may be, anywhere below where we're sitting right now. And so you can do the refinance, you can take the cash out that way. Or if you've got, which hopefully you do because it's an amazing tool, a home equity line of credit on your home. That is the tool to use to pull that equity out of your current residence. And, you're sitting at an interest-only payment. Obviously, you want to pay principal to that. It's no different. A HELOC or home equity line of credit is like a credit card on your real estate. So if you've got one, use it. It is the tool. Last but least favorite is the old-fashioned bridge, Rick.
Yeah.
That you and I are familiar with because it goes way back in time, and the bridge is exactly as it says. It bridges you from one piece of property to the next, equity from A going into equity from B, or to B, I should say.
So in that case, it would be better if I want to go move into the second home from the bank's perspective, and probably from the that's probably the best way to do that, because you're bridging to go to a new home. And will the bank give you a bridge loan if you're staying in the current home?
They still will, because it's still using your equity, but the cost of the bridge loan it's an expensive tool.
Okay.
Where the HELOC is probably is the easiest, cheapest tool to use to grab equity from your current residence, no matter what you're buying, whether you're buying primary investment, secondary, right? It's that HELOC is that most favored tool to do that. And it's an interest-only product. So just know that when you get billed on it, right, monthly, you're only getting billed for that interest-only portion, but it's the best and easiest way. Again.
Okay. And so what would the rate for like a HELOC typically be?
It's prime plus typically a quarter, a half a point. Take prime sitting at 7.75 right now, I think. 7.75 to 8%. So you're probably 8 1/4, 8 1/2, depending on your credit scores, depending on what your loan to value is. When you start to play with the HELOC, you get into what's called a combined loan to value, or what we call CLTV.
Okay.
Because you've got your first mortgage and then you put your second mortgage, right? Or you could do it this way, stack it on top of one another. And so, so your rate's going to be dependent on those numbers.
And the cost to start a HELOC versus the bridge is significantly different, right? So what would an average? So one's the bridge is what, 1.5 points?
1.5. You're paying a point origination just to get the loan. So you want 100,000, you're paying $1,000. To pick the loan up, then you're paying interest only, and that interest on a bridge is normally 9 1/2.
Okay.
It's going to sit 1.5 to 2 points over prime. For most institutions, most banking institutions, where that HELOC is sitting that quarter point, right, over prime.
Yeah.
And the HELOC is going to cost you $500 to originate.
Okay.
On the HELOC, the neat thing about it is, Rick, you get the credit card, which is really a debit card.
Right.
To tap into that equity, or a box of checks.
Right.
So again, you have tools to use with that HELOC as to how you get that equity. You can do what's called a dry closing on the home equity line of credit, to where you're not taking any money at the time, and then you're using the money at the time that you need it or want it when you're buying that next property.
Well, that's great advice. So next week, why don't we talk, since it's going to be our New Year's week episode, why don't we put on our crystal ball and look at not only what others are thinking about as far as where interest rates are going, but cost of mortgages and things like that, and we can figure out what's the best way to get into a home in 2025. What do you think?
I think that's great. I think that's the perfect thing to do. There's going to be a lot of inventory in 2025. So yeah, would love to talk about it.
Well, if you want to get a hold of Nancy, feel free to reach out to her at the number here on the screen, and I'm sure she'd love to talk to you. And as always, thanks again for being with us. Wow, seems like we just touched the surface and we're already 50 minutes into this conversation. So we're going to have Talonnie back because I think there's a bunch of other questions we could be asking her. And I really appreciate Debbie being on to help co-host today, and Talonnie. If you want to get a hold of Talonnie, feel free to reach out to her at this number. Obviously, she's got a lot of information, and she'd love to talk to you. And of course, you can call Debbie if you're looking to buy or sell. She's a great agent, and as you can tell, she also looks out for her clients on both sides. And if you're interested in other topics we've covered, you can go to theproshow.com, and we've got now 22 episodes out there, and we really appreciate you guys coming every week and checking out what we're talking about, and we're getting a great following, which is awesome. And once again, Talonnie, thanks again for joining us, and hopefully have you back soon.